Yes, consumer confidence for the month of June. In addition, we have some Richmond Fed indices. On Richmond Fed, if we look at the manufacturing side of the equation, expecting a number -3, comes out -10. That's the weakest, biggest negative month-over-month change since March. And if we look at the service side, the business conditions at -11, that's the weakest since October of last year. On June, consumer confidence from the Conference Board, we're expecting a nice even 100 on the headline. Comes in a little better than expected, 100.4, 100.4, and that follows sequentially 101.3, which is a downward revision of what was originally reported as 102. If we look at the present situation, 141.5, 141.5 comps to last month, which had a huge downward revision, all the way from 143.1 to 140.8. So big downward revision there. So 141.5 now stands as the best level going back to March of just this year. And finally, if we look at what may lie ahead on expectations, 73.0 sequentially following a slightly upward revised 74.9. 73.0 is the lightest level since, well, very recently, since April of this year. Most of these indices don't seem to have moved the market much, but that big revision to the present situation is something to pay attention to, with anecdotal evidence that they're slowing within the economy. If we look at interest rates this morning, we're hovering around 473 to 474 in a 2-year, which is a very sideways consolidation level. And as for 10-year, keeping a close eye on 4.25 also seems to be recent home base for 10-year note yields.